Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording the weekly show. It's Saturday, April 9th in the evening. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. Barrie, how are you?
I'm doing pretty well.
That's good. A lot of interesting things to look at today. Not that there aren't every week, but it seems as if we continue to build to some sort of crescendo here. Bitcoin is something we've been covering every week, using it as sort of a proxy for the animal spirits and risk taking. And old Bitcoin did an interesting thing when the 69-day cycle count ended here.
Mm-hmm.
We turned down pretty sharply.
That's right.
And right now we are clinging by our fingernails to support in the 42,300 area.
Mm-hmm.
Given that we've done an ABC up and the cycle count is done and we've turned down sharply, I would say chances are this support is not going to hold, and we should push lower into this, back into this triangle in this formation. And given that the cycle count is up, probably heading towards this 33.5 area of the half square.
Right.
Are you seeing anything different here, Barrie? Because that it just, based on that cycle count and the price action we've seen afterwards, sure looks like this counter trend up is done.
Yeah, it's looking a little weak, right? A little shaky in the knees there. So
right.
yeah, well, it's wrapping around that square line, and so far it's okay. It's on the upside, but it's not looking super strong.
No.
So, and it did complete that ABC to the upside. We finished up the that 69-day cycle. So I would say it looks like it's going lower.
It also stopped in that area a couple of weeks ago. You pointed out all this, this overhead and congestion. It just kind of got right in the middle of it and died.
Right.
So we'll see what happens. It's not a great harbinger for risk assets the coming week, but let's see if it can hang on.
Did you call out that level, Ben? The square?
Yeah, it's 30 around 42.3.
Okay.
42.3 area. So if we lose that, then I think, the probabilities favor we're heading down to the half square around 33.5. So, and also the levels, good point, Barrie, all the levels we talk about in the different charts, as well as, even the ones we don't cover, because we don't cover every commodity every week. They are on a spreadsheet updated, which we'll post the link to later when we post the link to the video. So let's throw it over to you, Barrie. I'm very interested to see what your big five looks like this week, and let's run through and see what the tea leaves are telling us. Back in the box.
Back in the box, comfortably.
Right.
Well,
might just end up being a coffin.
Hey, boy. It could be. Well, let's see. We did do that ABCD down pretty clean. The lows are right at that ABCD that formed during the week.
Well, your time counts sure nailed it. Look at that.
That high here, eh?
Yeah.
That was a good one. And
the 30, the 45, the 90.
Yep. Man, I've seen those enough times, so you got to really watch them when they come in.
Yeah, it's a good one.
And along with that, we had this 4630 being the key level we were watching to see, if we can get above that or not. And if we could get above that, then we would, what I thought was that would be the level to call a new leg, right? So otherwise, we're just going to turn down. And you remember how negative I was last week.
Totally. Yeah.
So what happened was we were looking at 4450 to be, we drew out this little box being sort of the support zone, and really the market is sort of firm above that. Even though it's weaker below 4630, this is the support area coming down from that. So if 44.50 goes, that's really the the final support of the lower end of the zone.
Mhm.
And then we'd expect it to go down and probably at least 100 points right away and test those areas. So that's kind of where we are. So for next week, it's 44.50 being going to be held or not. And, up in here, until we take out 46.30, we might see all kinds of shenanigans, kind of like what we saw last week, just like we saw up here, in that February time period.
Right.
So I think the focus has to be around 44.50 to see if we can actually hold that and get a decent, get enough buying coming in to run it up. Or if we lose it, then 44.50 would become pretty good resistance. And that's kind of how I'm treating it next week. So we're really keying in on the 44.5, which we tested it twice. So we'll see how that goes. And looking at the weekly chart, let me get rid of this. Don't really need that anymore. Well, we had 3 bars up and we took out last week's low. And that was the key there. I kind of mentioned it last week to see if that low got taken out. So we have a reversal technically. And now it's a matter of, are we going to continue lower or not? That's really it. And there's plenty of room to the downside. So we go back to the daily for the week. We'll watch this 44.50 and see how we do. And we should take a look at the
your 4 hour.
Yeah, the 4 hour. But I wanted to go back and show the, like you said, the 4 hour chart we've been watching.
Mm-hmm.
And, we've been watching it since this low came in, and it's been really helpful tracking the move up. And when it came up to the highs, when we had that 90, we were looking for resistance. No, that was up here, right? No, it was up here. We were looking for resistance up here, and we found that support at the next line. And this was a run up to see if we can take out this level. We couldn't, failed, found a little bit of support, failed again. And now, at least on a lower time frame, this being 4 hour, you can see how we came up against that line exactly twice and tapped it, but really couldn't get above that. And we, selling came in and we traded lower. So far as this pattern goes, we're on the weaker side of the line, that being this the middle line, the XP line. And as much as we're watching 44.50 next week, we should also be watching the Friday high to see if we can take that out. Because if we take that out, then we're going to settle on top of this line and we might go up and challenge. We have potential to run up. But long as we're below this, I would say the Friday high, it's definitely in a weak on a weaker footing.
Mm-hmm.
Okay. And I post this every couple of days on Twitter. So if you guys follow that, you'll be able to see it.
And that line right now is where, around 45.20?
Well, the line above, it's right. It's 23 right now.
Mm-hmm.
And of course, it's a slope. So, during the week, it's going to go up a little bit at a time. But I think Monday, Tuesday, we can just use the Friday high to be sort of a, if you don't have the line drawn in, you can just use the Friday high as a sort of a proxy. And do you have anything to add to this?
No, just it's looking heavy. And when I go over the NQs, they've been leading the other markets. You'll see why, this sort of bearish tilt we have is on the ES is probably valid given what's going on in NQ land.
Yeah, and the 4 hour always shows the hand a little bit early,
Mm-hmm.
And so it looks that way. And this area is 50% from both sides, so it's a key area to watch. And you can see that's where the battle was towards the end of the week. So we'll see how that plays out. But you guys know the levels to watch now. Moving on to bonds. Well, what a show last week.
Yeah.
Very good. So what do we have here? Well, square 72 was, well, that's where we got this 149. And I think last week we talked about, holding about 149 being positive. And if we do that, we should be able to go up and test the 153. But 149 didn't hold. And the idea was if it didn't hold, then we're probably going to go back and test the old lows. And we certainly tested it and failed. So
Pretty dramatically, yeah. straight
dramatically,
through it.
yeah. So now we opened up the lower side of the square, and we're off to the races. Just going off the swing high. So the next support level is around 140, and we'll just have to use that. And the other thing I wanted to show was if you go to the high in 2020 high and take a measurement, you can see we went through the 50% of the third square, and we're heading right down to, the target is right now is 137.20. So it's really 137.20, and say 138, 140 is really the next target, and we're almost there. And it's possible that we do that early on. And if not, now this 146 area becomes resistance. Does that make sense, Ben?
Absolutely. I mean, bonds are weak, and we're wondering if the bottom is going to drop out or we're going to get some sort of relief bounce, but it's really weak.
Well, we did the monthly chart yesterday, and it should be up in a little bit. And we looked at that. Your monthly. Are you going to look at the monthly bond? No, we looked at it on the show yesterday.
On the show, yeah.
Well, on that there was basically you guys can go back and check the monthly show done on April 8th, and we saw a huge monthly support line exactly where the Friday low came in. So the idea was, we can, if we take that out, we have a lot lower to go. And I think, Ben, you're going to cover your weekly bond chart today.
Yeah, we'll take a quick look at it to see how we're either the bottom's going to drop out or we're going to bounce. I mean, there's right. Kind of no halfway here.
And but next week we could do both. We could drop down into 137, this area, and finish the square out and then bounce, right?
Right.
And that would mean on the monthly, it'll have a little bit of a false break kind of a thing and then recover.
Sure.
But either way, below 146.15, it is, it's fairly weak, I would say.
And like we talked about on the monthly show, no matter what you look at on a bigger picture, bonds are weak, and the major trend is still down. There's no sign of turn. As a matter of fact, it's sort of digging its heels in that it is a bearish, major long-term trend right now.
Right. So two key levels to watch: 146.15, 14 being resistance, and the next target is really 140. And if that slips, 137 is the completion of the bigger square coming off of the 2020 high.
Mm-hmm.
That's that. Let's take a look at the weekly bonds. Well, there's a bigger square.
Yeah.
And so there's
right there, 141 and change, right?
141 and change. Doesn't mean we can't go a little below and tap 140. It would make sense.
And markets like to do that.
Markets love to do that. But that's, so we have about a 1 point play there on a weekly basis. 1 point plus or minus 1 point is not bad. But this is a major support area. And the thing to watch here is if that support on a weekly basis, if that goes and we go down to tested lows in 2018, we're going to be in all kinds of trouble here. So keep an eye on that. We're heading right into it full speed.
Barry, I think the monthly, if we lose that trend line, the next support on the monthly, if I'm not mistaken, is in the 126 area.
Yeah, well, that would be right about in here.
Mm-hmm. So that's what we're looking at potentially.
So that's it for bonds. Let's go take a look at crude. It's hanging, the lows are kind of hanging a little below the zone, very optimistic zone that we had.
Mm-hmm.
And so here's the thing, the fact that it's not holding above 72 and it's kind of crisscrossing and got under a little bit, and it did it over here earlier. So it's a little soft, or it's not ready yet, but it might be well, let's just say it might be getting close, right?
Mhm.
That's how I would look at it. And I think last week we talked about it, having a little bit of a correction, and it did. And if you look at the 90 square 90, we're doing 90 low to low. So it's possible that low is in place, and we're kind of holding around 97, which was one of the key areas. So
That's
I
good
think
timing. Really good timing.
yeah, the 90 is pretty good. I like that. And we were looking for a little bit of correction, and we got that. And now, if 97 is held on any kind of, we can hold above 97 on shorter term corrections. I think we're ready to go back and test some highs.
Mhm.
So watch 97. If we get under that, means obviously we're not ready. We're probably going to go check around 97 or even 91 or lower. But 97 is the level to watch. If we can kind of manage to hang around above that, we can expect 102 to be tested and then on upwards. So watch 97. It's a key sort of a balance point for next week. And I would maybe adjust this down to something like that, make it more practical.
Mhm.
You don't always nail it on the first time, first shot.
Right.
So. All right, so that's it for crude. You got anything to add anything there, Ben?
No, I think that's exactly right. We got to, if we can hold those lows, it can build a base to move higher.
Mm-hmm.
We got to see what it does.
Right. And here's the case for lows. So the reason we're being all brave is because the idea was if crude could hold above the 90, square of 90 on a weekly basis, it's still pretty firm ground. And we've been talking about this every week. And we managed to, we'll poke down here, but it gets bought up. So we're basically holding above that square, and it's around 96. And we corrected, about a month, we're holding above it. So that's fairly good. If this was done and over with, obviously we're going to get under the 90, and then it'll be a whole nother business.
Mm-hmm.
So as long as we're above it, I think it's in good shape. I don't think this is finished up at the high, and we had a target of about 135, was it?
Mm-hmm.
And I don't think it's too late to 135. I don't think that's out of range, so we'll watch these levels on a shorter term basis to see if it can get some traction, and if it does, and we start clearing 102 after this correction is done, then we're in business. If 97 gives up, then I think we have a little bit longer to wait, let it finish up the correction.
I think your comment about it, it's not quite ready yet, but we're close is the appropriate comment here.
Mm-hmm.
It looks like it's almost there, but not quite.
Yeah. And the level will tell us, give up the sort of the timing.
Exactly.
All right. Let's take a look at gold. Now, gold was definitely sitting in the box.
Mm-hmm.
And well, what can I say? I feel like it's a broken record when it comes to gold. It's like, it's bullish, but it's not moving. So 1915, 1940 was sort of the zone we drew the box in. And as you guys can see, we kind of have higher lows going up. And we're starting to push to the upside of 1940. Mm-hmm. Again, it's the same story. So, as long as we can do that, it's firm. And when is it going to go? I don't know exactly, but we're definitely primed, let's say. And there's also a little bit of a triangle going on here. So it's possible if we break that, that we're ready for business, short time. That right there. So, and we kind of broke to the upside of that. And we sat in the zone for a while, and we talked about, being above 1887 would be very, very good. It's firm. And if you can hold above this bracket, the box, it's even, very strong position. So we're there, and he's starting to move higher.
Looks like it. I want to highlight that one this week too, because it looks ready.
It looks good. Yeah. Mm-hmm. And looking at the weekly again, we've been watching this. We talk about this every week. And we had our own weekly support zone, and we held really nicely above that. And again, 1919 here on a weekly basis. Look at that. All the opens and closes are above that. They all get bought up and get pushed above 1919 at the end of the week. And as long as we're holding here, 2100 still not out of reach. And if we get to 2100, we have further to go, let's just say. But that's
Agreed.
the first resistance that we have on the charts.
Man, seeing that for the last 6 weeks, none of those bodies of those candles could get into that box is impressive, isn't it?
It's impressive. Yeah, it's holding really well in that zone. So, and we'll see what happens next week.
Mm-hmm.
Moving on to the dollar.
It got to triple digits this week.
That's right. We called that 101 and it almost got there.
Almost got, but did print 100.
Yeah, it did. Well, God, it's funny, every time I get to the dollar and, these things that are trending, it's like, I have nothing to say. Like, what do you have to say to that? It's like, well, keep trading.
Right.
Keep trading till we, I would say, yeah, 101 would be a good target. But you can see the square size to come into play about 100 and a half. So 100 and a half to 101 is kind of where it comes into play. But we did tap the upward channel here last Friday. And we're holding well above 99, Ben. Look at that, right? So well, I think until we clear the 90, if we can hit the tap at least 100 and a half or 101, then I think it'd be time for the dollar to back off. For now, it's in really, very strong position, almost close to clearing out this leg.
It's been rallying for almost a year, if you look at it.
That's right. Yep.
And I wonder if we could pick up any timing soon. For here, here's a decent spot for timing.
Yeah, I should do some timing work for next week. It's a good idea. Yeah. And here, coming off the lows from this year, we did 45 up into that high on Friday. Mm-hmm. So we're getting close to that resistance. It's really close. Mm-hmm. Let's take a look at the weekly. And the weekly 90 degrees up. There we go. It's pretty much the same thing as the daily, so the same 90. Mm-hmm. And we're almost there. So we'll patiently wait. Trend is up.
So 90 weeks is in September, huh?
90 weeks. Yes, that would be September. Mm-hmm.
It's an interesting spot.
Yes. Well, yeah. Yeah, that could be interesting. And we know if we take out 90, that's the thing. This is our first resistance basis, the sort of the techniques we use, that we have the half square, full square. Mm-hmm. That would open up, if we somehow manage to take out this 100, 101 and settle above that, next stop is really 106.
Wow.
That's going to really burn some countries, but
man, talk about a wrecking ball that gets up there.
Yeah. So, and look at this angle, right? Look at the momentum in here. It's relentless.
Steepening too.
Mm-hmm. So that's the story with the dollar. Well, might as well look at the weekly euro here while we're at it. Mm-hmm. And pretty much reverse the dollar story. It's been super weak. And we had a box drawn up above and we were consolidating in it. That was around 1221 was the resistance. Week before we got close to it, tapped reverse, selling came in, and now we're back near the lows. It didn't make new lows. It's leaving some room, which means it's possible the dollar reaches out, do the 101 or 150, 100 and a half, and the euro dips in and finishes up the square, or at least go and do a false break here. Mm-hmm. That would be ideal if that happens. False break here. Right? Mm-hmm. And God forbid if it takes it out and gets stuck below this level, right? Then euro's just going straight to hell. So
that's not off the table either.
Not off the table. No. But it's important to watch these levels. And the support down here is basically the low we had, COVID lows from 2020.
In the 106 area, huh?
Right. And we're just right there, staring right at it.
Mm-hmm.
And so we looked at, this is interesting. Last week, we were looking at, if there's support around here, it's this 108 area tapped. It was a good support area. We did 144 down. And so we were thinking it's possible that we find some support here and consolidate and try to go back up here and check the resistance level. And on the daily, it's 112 is the lower boundary of it's the half square lower boundary of this the box. And it's interesting, we're playing, coming off of this high, we're right at the 144 level, and it's a key level to make or break. You see, if we go from the high of 2021, we're really not being able to hold above it, right? We're just starting to crack through. So it's possible we go a little lower, I would say, at this point, rather than that low being in place.
That would fit with the weekly completing too.
Right, that would fit with the weekly. So and that would go back to checking these lows from 2020.
Mm-hmm.
All right, see how that goes. And the other thing, Ben, when you have a triangle like this, the center of the triangle is always good support to check on a check back.
Excellent point.
Yeah, and look at this. We're right there checking
right
back.
there at the apex. Yep.
So it's a chance, if we turn here, great. If we don't turn on these checkbacks, is definitely lower. So
it's amazing how many times markets do that with that apex of that triangle. It really is.
Yeah, it does it a lot. I mean, a whole lot of times. So we'll see how that goes. For now, it's let's just leave it as weak.
Yeah.
Well, that's all I have. Let's put it back to you. Cover some of the commodities and metals and whatnot.
Okay. Sounds good. We've got several commodities to review today, but let's start with the NQs. As I was saying, the whole way down, actually the whole way up, and now the whole way down, NQs have been leading the broader market. It was weaker than the S&P. It topped before the S&P. And right now, if you look at the structure coming off of this, this was the rally off the March lows. We tried to push above the full square here, could make it. Last week we said, boy, ideally the perfect setup would be is if we bounced back up, got stuck under
and
this full square and fail. And look what we did.
Mm-hmm.
And look at those bars, man. Every one of them's closing near the low, except for this inside bar.
Hammer.
Yeah, just boom, boom, boom. So this looks to have rolled over. We made a lower high, and now we have a lower low, and it's pushing. So the next big test is going to be in this, 14,000 area. If that doesn't hold, I mean, I think you got to look at, we're going down and minimally going to be testing these lows. And by the momentum and the potential for this being a third type wave, I mean, minimally you say ABC, that puts you way down. But if it's a third wave, it should be pretty fast and pretty scary to the downside.
Well, even if it's a 5, it could be fast.
Absolutely.
Yeah.
So this is it's in a very tenuous spot where we could say, hey, the heat is off and things are not looking so bearish. Is if we get above this, call it 14.6 area, sort of take out the highs from Thursday and Friday. We can get above there, and at least maybe we'll chop, if not rally. But below this half square, it looks like we're bound for a test here. And if that fails, I think odds favor we're going to take out those lows. So. This is the setup you kind of look for, right? A lower high into the square. We got it. Great reaction off of it. Now we're just seeing if there's more follow through this week.
Absolutely. Yep.
So that's the NQs. Let's see. We got several commodities to look at. Interestingly enough, one that we've a group that we've been very, very bullish on longer term, but the last few weeks, a couple months, about a month or so, haven't really been focusing on them because they've just been so strong and we're correcting in the grains and they've come up again on the radar. Corn being the most bullish, just based on the fact that after spiking into its high, along with wheat and along with soybeans, look at this correction, did a really tight ABC, and only one bar, as it was completing this ABC, could we get below, this support level in the, let's call it 727, 725 area. And then last week we started, look at this move starting up. So corn is pushing. It looks like we completed this fourth wave or whatever kind of correction we are here. And we're kind of pushing to test and see if we can go make new highs. So corn's on the radar. If we hold above this half square in the 755 area, super, super bullish. And if we can do that on any pullback and stay on top of that, it looks like we're going to take out these highs and keep going. And there's something else I want to say about commodities in general. A lot of the commodities that are further along in their rally have sort of pushed to these 2011, 2008 sometimes have pushed to those highs and are either stalling or kind of pulled back from there. One of these commodities, because, sort of on our cycles and the timing, we're looking at, really 2 to 3 more years at least of bull markets in these commodities. One of these commodities is going to be the first to break through and make a new high and sit on top of those highs and then push. And I think that's going to be the preview for what happens with all of them at some point. And corn may be the first candidate. And if you go and look at the monthlies, you can see if we go back far enough, we're in the area of previous highs, still below it. But this may be the one that does the, sort of leads the path for the other one, saying, hey, those 2008 highs or 2011 highs are not the limit, that they're going further. So watch corn, because I think it may actually be one of the leaders that does that.
And it held, look how, how well it held above that square.
Really, really
Not
well.
weak about that.
Nope. Anything else? Any other comments you want to make on this one? Anything stand out to you?
All. I mean, I hope everybody copies down the lines, because they've been working really well.
Really, really well. Yeah. Let's go to another one that looks good in this group. And we highlighted it on the monthlies as well, because it did something nice there too. So here's beans, like corn, made a strong run up. The high came in right on a full square, pulled back sharply right to the bottom of that full square. We've been chopping around for a month and a half. Made another low on this full square, and then look at this move that's coming out of here. This is a really strong move. 1, 2, 3, 4 straight up days. Friday we closed on the high. So I'm watching this half square here at like 1666, 1665 area. We stay on top of that. Again, this thing looks like, whatever this consolidation is, fourth wave, or, some sort of ABC or whatever's going on here, that it's ending and the next leg up could be starting in beans. What do you have to see here on the beans chart?
I think your square last week, perfect hit, coming down into that square support. Well, I think it's good. I think we're ready to go. Yeah, that level. I'm talking about last week's low. You see how it bounced right off the level.
Right there.
Yeah. So grains are working really well. Well, this is like that. And that's, I think we even talked about it last week, the week before, that, these are all in bull markets. So you're looking to pick and choose the places to get in. And this is why we like using these squares. You can see how, it came down to the tick. And so they're working really well. And just the fact that it bounced, it's in a good position, it's strong. And if that trend line above goes, I think we start the next leg.
Agreed. And the thing I really liked is you're holding to the tick is fantastic. And that's, just magical when it does that. But the look at the reaction off of it, wham, 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 wham,
Mhm.
4 days in a row. Just really, really good, strong buy. So, corn and beans look good. Wheat's still, chopping around, and it had the biggest move of all three going into those highs. So it's not surprising that it maybe is lagging a little bit.
Mhm.
But corn and beans, I think they should be on your radar. It looks like fairly soon we should be starting, or could be starting the next move higher. So keep an eye on those two grains. One that Barrie talked about that we'll also talk about here. Gold, I love the pattern on gold. It's a pattern that we've made a lot of money off of and been able to successfully buy these commodities, before they make these kind of moves, is this pattern of a base with higher lows. Then you have an acceleration move, and then you get another higher low, and then it starts curling. And just as Barrie was talking about on his Big Five review in gold, we had this little breakout Friday, but the curl is starting to happen. So I don't know if it's Monday, this week, next week, 2 weeks, but there's some accumulation going on here, and they're pushing and they're starting to push. And so I think it's time to really focus on gold. If you don't have a position, if you have a position, get ready because the move looks like the move higher is coming really, really soon. I know you covered gold pretty extensively, so it's, I don't think you have much to add. But again, notice that on this correction, we're staying above the half square. We're staying on top of all this price action here, and that's just bullish. So maybe not bullish Monday, maybe not bullish this week, but looking out bigger picture, this thing's going to go, and we should be pushing, as Barrie said, if you're talking about the top of the square, that's 2150, 2200. So I think things look good for gold. Let's take a look at silver. Silver's a little behind gold, but as you can see on Friday, we closed on the high, pushing the top of the triangle. Again, the key level here in silver is this full square, which is around 2550, call it. If we push above 2550 and sit on top of that, that is really bullish. And I love the base, the higher lows, the curl that's starting. This is one that looks like it's under accumulation and just waiting for the trigger to see the strong move going higher. What catches your eye on the silver chart here, Barrie?
Well, I think the trend line holding and the other trend line about to break.
Yeah.
So there's definitely some pressure building up.
Yeah, I don't know what it is, but the metals are under accumulation. So this is coming through in the charts, and we just gotta pick up on that and get in a position to catch the ride. Let's go to the next one. Now we have two more to look at, and they are the couple of softs. Start with sugar. Sugar we spoke about, both of these actually we spoke about last week, and they're starting to come to fruition and starting to move. Here's the sugar chart. We've been in a 8 to 10 month consolidation here. Started off sideways, went down, and then we got down to this half square support, and then just boom, started moving. Notice where the first pullback came, right on the full square. And we pushed up to the half square, and this past week made it above the half square. So now we're challenging this area around the full square. This is called it 2050, 2055. I think we're setting up the push and the curl, and the momentum's kicking in. And sugar, I'm thinking we're going to make a full square, in the 2250, 23 area in the not too distant future. It looked like last week this thing really caught fire, and there was a bid under it. So
what's the level above?
Right here?
Yeah.
That's 2052.
Yeah. Okay. Mm-hmm.
And then we pushed Friday to try and get there. Again, closing on the highs on a Friday is always bullish. So let's see if they ready to run it this week. If we pull back here, to the previous high, which is a little under 20, like 1990, or even back to this half square, it's still bullish. The structure, as long as we're above, call it 1950, it's really bullish. That means we're above all the price action from 2022. I like sugar. I think this chart has, if you look at the monthlies, watch the monthly show, you can see it's one of these commodities that's not as far along in its bull market as the others. So that means there's a lot more to run. So check out the monthly show to get the bigger picture perspective. Even on the daily here, we're set to go, in my opinion. What are you seeing in sugar here?
I'm seeing the same thing, Ben.
Yeah.
And it's looking pretty sweet. So
It absolutely. Yeah. This is one of my favorite charts right now in sugar. I think we spent the time burning off this sort of correction. It was mostly sideways, and now we're looking like we're ready to move out and up.
I mean, it'll be nice once it settles above that square above. Up until then, it could still possibly sort of, take its time.
Jump around. Yeah, it could jump around.
But it's yeah. At least that's the first target, right? It's the first resistance is right up there.
Yeah, we just want to get through this and then stay on top of it, and then we open up 22, 23 area,
right,
which is could be short term. So really like sugar. Last one we want to look at today is a little behind sugar, but very similar pattern, and that's coffee. Coffee, last year we caught it a couple times for decent moves higher. We've had a pullback this year, 6-8 week pullback so far. The most important thing about this, and Barrie and I were talking about it, is in real time, is we held this really critical support twice. 212, we were both looking at it going, man, if this thing doesn't hold 212, we're going to have to short this. It looks really bad if it doesn't hold there.
Yeah, look how textbook that was.
It was beautiful, right? Came down, pushed, couldn't do it, rallied back up, tried again, higher low, and then we get the push off the higher low. So we're starting to see, and then here we had some back and forth, and now we pushed, and Friday we closed above the half square, which is in about the 231 area. So as long as we stay above that half square, it opens up to 250. And if we get to 250 and get above, then you're looking at new highs for this run, and 288, 300, not out of the question. So coffee is really doing what it needed to do. It corrected, held important support. See why this is important. It's not only important because of the square. These are previous highs, right? Highs from last year. Couldn't get under them.
Mm-hmm.
That's a sign of a bull market. Anything else jump out to you, coffee, that you want to point out?
Well, just what you said, the correction could be ending, and now it's time to start looking at the upside. I think it's fair.
And your point about, in the commodities, since they're in a bull market, this is what you're looking for. You're trying to isolate, where is a pullback ended? Because potentially then the next leg up could be starting. So the big picture in commodities is they're in bull markets. So what we're trying to do is find places where the corrections end. Like, where has a pullback ended? Where has a consolidation ended? And catch that next move higher. And that's what we think we're doing in sugar, in coffee, in corn, in soybeans, in gold, and silver. And that's sort of our methodology. The big picture we know based off the monthlies is they're in bull markets. So the key thing is to watch these markets, all of them, and say, where are these interim corrections over, and where's the next leg starting? And that's where we want to get involved. So really, really big week coming up for the markets. Not so much cycle wise, but we're at really critical junctures in price and time in a lot of these markets. So curious to see what direction gets chosen. Example was one of the first chart, the Bitcoin chart. It's hanging by its fingernails on that support. Where's it going to go? The time cycle came up. What's going to happen? So we're watching the price action, and based upon that, we'll weigh the probabilities of what's the most likely outcome to be. Anything you're specifically focused on, Barry, this week that you want to share?
Well, when you were saying that, I was thinking, well, we have to be watching everything because everything's ready to move, and they are moving. So everything's at critical levels. Crude is at critical levels. Gold's just pushing up higher above the zone. Bonds are pushing lower. And the market's pushing lower, testing this 4450. NASDAQ just hanging by its nails. So everything is ready to go, pop one or the other. And it looks like there are more of continuations now than reversals.
Right.
But we'll let the levels be the guide so we know which way the weight's coming in on.
Excellent. So have a good week, everybody. Barry, have a great week. And thanks for listening to the show. Thanks for liking, sharing, ringing the bell. We appreciate the feedback and hope everyone has a good week.
All right. Thanks, Ben.
Take care, Barry.
Have a good week, everybody. Good job.
Bye-bye.